So we're going to take a look at cash purchases, and then we're going to take a look at cash sales. We're going to take a look at these transactions in terms of general journal entries and then the ledger entries as well. So the first transaction we're going to take a look at is the cash purchase of $400 inventory plus $40 GST. So we'll take a look at the journal first. The elements that are affected include inventory, GST clearing, and your bank. So if we take a look at this cash purchase, since we're buying inventory, our inventory should be debited by 400. Our GST liability when we make a cash purchase should decrease, so we debit that by 40, and therefore our bank overall should be credited or decreased by $440 as a result of the cash purchase. In terms of our ledgers, our inventory ledger should be debited by 400 with the cross-reference of bank. Our GST clearing ledger would also be debited by 40 with the cross-reference of bank. And our bank ledger would be credited by 440 with the cross-reference of inventory / GST. This follows the double entry rules. So when an asset increases, we debit it. When an asset decreases, we credit it. And when a liability increases, we debit it. So now let's take a look at a cash sale of $800 plus $80 GST inventory with a cost price of $400. So the general journal accounts that would be affected include the bank, the GST clearing, the sales, the cost of sales, and finally the inventory. So we split it this way because these first three transactions are referring to the selling price, and then the last two are the cost price. So our bank, as a result of this cash sale, would increase by $880. So if we have debit this side and credit the other side, so it should be debited by $880. Our GST clearing should be credited by $80. And our sales, since it is a form of revenue, should be credited by $800 as a result of the increase. Our cost of sales expense should be debited by $400, and our inventory should be credited by $400. So it's really important that we do cost of sales and inventory according to their cost price, and the other three transactions or entries rather at their selling price. In terms of our ledger entries for this transaction, our bank would be debited by $880 with the cross-reference of sales / GST. Our GST clearing should be credited by $80 with the cross-reference of bank, and our sales should be credited by $800 with the cross-reference of bank due to it being a cash sale. Our cost of sales expense should be debited by $400 with a cross-reference of inventory, and finally our inventory should be credited by $400 with a cross-reference of cost of sales. So those are our ledger entries for a cash sale.